Welcome back, investors, to Ticker Time News. I'm Adam, and boy, was today a gut punch with Micron playing the role of the Grinch, just stealing the Christmas spirit from the semiconductor space and the rest of the market after issuing a gloomy earnings report today, and that just completely tanked the markets. But the silver lining is the candlestick that we have left for today. A long wick on the bottom of the body of a bullish long wick candlestick. The long wick below the candle body signifies that sellers tried to push the price down significantly, but buyers managed to push the price back up. The buyers did so by showing considerable buying strength, which will carry forward and lead to a price increase. There we go. That's the Grinch that stole the market today and the silver lining of the candle left behind. But before I do that and talk about the market and the candlestick, thank you. Thank you for this comment. I greatly appreciate it. IFR Fun. Thank you very much. And the comment is on the screen so y'all can read it. Learning about the 5-day EMA has been the most beneficial thing to me. It eliminates FOMO when you understand what is happening with this indicator. You are very welcome. And for everyone else who may not understand what the 5-day EMA is, here it is on the chart. I've completely removed almost everything off this chart that I can. Now there is this light blue, royal blue color trend line or moving average that is moving with the candlesticks. I don't know how easy it is to see on your screen, but let me just start somewhere. I'll start right here where it's clearly open. This is where it's moving along. That blue line, this is the 5-day EMA. Okay, look at how it's moving. This is the most frequently tagged moving average that there is. And the way I think about this moving average is like a circuit board, okay? There's just a quick little me highlighting where that 5-day EMA is. But think of the 5-day EMA as like a circuit board, okay? When the circuit is complete, meaning the candles themselves, whether it be the body of the candle or the wick of the candle, is touching that 5-day EMA, the circuit is intact and the current can run freely. However, sometimes the candle, the wick, and or the body become disconnected from that 5-day EMA. And there's only two ways to get back to it. And by the way, when they are not touching, the candle body or the candle wick is not touching the 5-day EMA, that circuit is not complete. That electrical current cannot pass through. It's like the light switch has been turned off. Here's a perfect example right here. Let me zoom in and open this up real big for you guys to help you see it. Now, typically, okay, we've got this candle right here, all right? It is disconnected. It is not touching the 5-day EMA. What happened to the market when that happened? The market moved sideways until it reconnected. Now, typically, the market doesn't go but 1 or 2 days being disconnected from the 5-day EMA. And that's useful information to know. Because if you know that the market has shot up just like this candle right here did, well, either the very next day is going to be a red day and we're going to reconnect with it, or the market is going to start to move sideways and reconnect with it that way. But it has to reconnect. It cannot stay disconnected forever. It must reconnect. Here's another example right here. This candle right here became disconnected. Barely, but it is not connected. The very next day was a flat day. We went nowhere, still disconnected. That would be day 2. And here we are, day 3, reconnecting with the 5-day EMA, making that circuit complete. This can help you, like IFR Fund says, takes the FOMO out of knowing what's happening with the market. All right. Now, let's go over here to another example closer to what happened this past week. Okay. Let me open the chart up so it's a little easier to see. All right. I want to focus on this candle right here above my highlighter. I know I can't draw very well with my highlighter. That's a horrible arrow. Let's just do this. You get my point here. It is connected with the 5-day EMA. This was last Thursday, so a week ago. Then we get to Friday, and look at this. This candle right here, it's not connected with the 5-day EMA. We've got a disconnect. That means that either we get a green day, it reconnects, or the market moves sideways. All right. And if I just take a line and draw straight across here, all right, there's day one, there's day two, disconnected, day three, reconnected with the 5-day EMA. The market basically moved sideways to reconnect with it as the 5-day EMA came down as we had the 2 red days and then moved sideways to reconnect. Today, look at today's candle. All right. I know I'm making this. This is the biggest I've ever had candles on the screen before. But look at today's candle. Let me clean some of these marks up real quick and open that up again. Look at today's candle. Okay. Look at that. It is a pretty big wicked candle. There's 2 things that are important here, okay? Number one, the 5-day EMA. It did not quite touch, all right? Today's high was 38.53. The 5-day EMA was 38.54. So 1 point away from it. However, this morning, when price fell drastically all the way down here, it tagged, and this is what I find very fascinating about today. It tagged the lower end of the weekly expected move on the SPX ticker nearly perfectly. How'd that happen? I am very curious about that. How did that happen? Maybe a mystery. It may be a coincidence. It may be a conspiracy. Who knows? But one thing I want to point out, the portion that I said at the very beginning of this live stream about this candle, okay? We've got, for some reason, the highlighter is not working very well. Okay, the highlighter for some reason is only working where the candle lines are. That is interesting. It's because I've never had the candles blown up this big before. Okay, so we'll just do it this way. All right, so look, we have today's candle, right? It opened up, big gap down all the way to here, all right? To the weekly expected move, 37.64. Now, if you're in our private investor community, you got that information Sunday evening when I send out the weekly expected moves on about 40 products or so in the market. And on the Monday live stream, we always talk about the weekly expected moves for the main indices. So you should always have this information. It's very important to know. It comes directly from the options market, and it is telling us with a 68% win rate that price by the end of the week will be within a certain margin. And that margin is the weekly expected move. There's a low number and a high number. And what's in between, that's the margin. That's where price action should end by the close of business on Friday. So we have 1 day left, and it looks like we're going to stay within that margin. Okay. Also, with this candle, the wick is huge. Okay. I don't know if you noticed this or not, but I mean, it looks like a firecracker. Okay. All right, I'm just cleaning a couple marks up here real quick. All right, the wick on this candle touched the weekly expected move, and look at how price just pushed up like that. Sellers initially this morning took the price down all the way to the weekly expected move, and let me go show you here right quick. I'm going to go, and it's going to look real funny. I'm going to go to the 5-minute chart and look at this. This is today right here, okay? So this morning we have, I need to move this right quick right here. This morning we have the gap down right here, okay? We've got the gap down. And then price quickly and harshly sells off all the way to the weekly expected move on the lower end, and it bounces off of that line nearly perfectly. Now, weekly expected moves, even the daily expected moves that we're working on, they're not supposed to act like support or resistance lines. No, they're telling you where price action should be going in the week ahead. But it acted like a support line. I have to say it. That it was just too perfect of a bounce today for price to hit that, and then 5 minutes later we're rallying. Okay, we're rallying. Now, what I did this morning, because this was a big shocker, I was not expecting, and quite frankly, I wasn't even prepared for the market to drop like it did this morning. That's on me. That's on me. I saw too many signs that pointed to the market floating up, meaning it doesn't go up rapidly. It just kind of, it moves up little by little. Now, I was looking for that. I got the complete opposite this morning, and it went bam. But that weekly expected move. So what I did when the market opened up like this, the first thing that I did was I put an anchored VWAP on the opening candle. Okay, the anchored VWAP. This shows you it's using volume, it's using price, and it's a metric that shows you over time that if you bought wherever the anchor is set, if you bought at that moment, are you underwater, meaning negative, meaning you lost money, or are you above water? Are you in the profit? Have you made money? This is what the line tells us. And it's from where it's anchored to. So this morning, I anchored it to the first candle since we had the big drop down. And I was waiting for price action to come up to it, right? Because if you look this morning, all the way, if we follow this line, anyone who bought first thing this morning, and I'm not talking short positions, I'm talking a normal bid buying the market when it opens, you would have been underwater for the majority of the day. Not until, let's see, this would have been 2:50 Eastern time in the afternoon, 2:50 Eastern. We tagged this and it acted as resistance for about 5 minutes. And then we broke above it. We back tested it by pulling right back to it. We found support there, and then we launched. And then people got scared, sold, and we didn't quite come down and tag the anchored VWAP, but we did bounce and come back up. And in the day, Not at the high of the day, because that would have been first thing this morning when the market opened, but pretty darn close. So my play today, it was a pretty quick in and out. Once we broke this anchored VWAP right here, I took a small long position on the SPX and I sold at the close. So just a real quick in and out trade. Once we back tested and then lifted off from this anchored VWAP, I bought some shares. I bought some shares going long. But then once we broke this area right here, which was right about 38.10, I added a few more shares. Okay. I didn't have a full position. All right. Maybe a third to 2/3 of a position. Maybe not even 2/3, maybe like a third to a half of a position. It wasn't very big of a position at all. But I bought once we retested the anchored VWAP and we bounced off of it. And then once we broke that prior area of resistance at about 38.10, I bought a little more and then I closed out when the day ended. A quick little profit, not a whole lot, maybe about 0.8 to 1%, not a whole lot. But that was my play today. And I was unprepared. I figured I had to play the market at some type of rally today to make up for the stop out that I got this morning. Oh my goodness. Okay, so again, thank you for the comment. I greatly appreciate it. FOMO was calling my name today. Yeah, it was pretty nerve-wracking. But this is where you got to take emotion out of it and let your plays work out. This is where the importance of a stop loss is clearly shown. As I bring the chart back in and bring a few more days into this, I mean, look at how price acted here, okay? Now, many of you know I took a long position in the QQQ a few days ago. I thought for sure we were nearing a bottom, we were in a wedging pattern, and we get a bounce. We did get that bounce, all right? First, it came not as something big, but as something, oops, I'm moving the chart when I don't want to. Not as something big, but as something small. This reversal right here, this was stage one, okay? I had already bought in little by little, lowering my cost basis all the way down. And then yesterday we had the gap up in the morning, the move sideways for the rest of the day. I should have closed my position completely here, but I didn't. I closed a third of it because when you're managing risk, okay, you don't keep a position open 100% from the time you get in until the time you get out, unless you're playing maybe like a quick scalp or something short, all right? You go in stages. Maybe you buy in stages on the way down. You know the chart pattern, you know the setup, and you've got the setup in your scopes, like I did. I knew that we were going to eventually pop out of this because we had a massive move down and then we were getting into a wedging pattern, a falling wedge to be precise, which is typically bullish. We typically will see a reversal from a falling wedge pattern. And it's exactly what we got. It was very technical in the way that it was structured. So you buy a little each time you hit another low, you hit another low when you're in that chart setup. So that way, when you get the breakout, you've lowered your cost basis and you may have a full position by the time the breakout occurs. And then on the flip side of that, once you've got your profit, once you've made that move, then you start taking a little profit off the table, maybe a third, maybe the second third, and then you let the last third ride all the way until it ends, right? Or until you're stopped out. So having that stop loss is so critical, especially for a move like today. So for me, once we had this big move yesterday, I removed a third of my position. I still had 2/3 of my position open on the table. I thought I knew. This is where I'm not always right, and I'm admitting it right here with you right now, that I did not get this call right. I was wrong. I missed it. So I still had 2/3 on the table. And I ended up getting stopped out because of my stop loss that I had set up right at today's open. Boom, right there. Stop losses are very important. Use them to your advantage to help you manage your risk. That's what they're there for. They're there as like an insurance policy. A lot of times I like to use many different types of stop losses because there's many out there. A trailing stop loss is one that I like to use sometimes. And for beginners, a trailing stop loss may be the best type to play around with and learn. Because that trailing stop loss, say you have it set at 2%. Using a real tight number there, 2%. So if your play, whatever you're in, if it goes up by 10%, okay, your trailing stop loss moves right up there with you, that 10%. Only when your equity, your stock, your ETF, whatever it is that you have, once it drops 2%, then that stop loss would stop you out at that moment in time. So the 8% that you would have got from that move, that's your profit, okay? So use that trailing stop loss to help you get familiar with how the stop loss works. Because in situations like this, you always want to be tactical and keep your stop loss tight. At least that's my experience in a market like we're in right now. And I don't talk enough about using stop losses, and today is the perfect example for why you should be using stop losses. And going back to the very beginning of this live stream and the comment about the 5-day moving average or the 5-day EMA, exponential moving average, why understanding how that works is so important. There are hundreds, maybe even thousands of tools out there to help you become a better investor, a better trader. Use them. Learn how to use them. The anchored VWAP, that's another one that is a must in my toolbook to use. One great example for using the anchored VWAP is on FOMC decision day. Set an anchored VWAP for exactly at 2 p.m. Eastern when Jerome Powell comes out and speak. Why? Because there is a ton of volume being traded at that moment in the market. And setting an anchored VWAP to that will help you understand all of that price action, all of that volume that takes place during that moment in time. Where are the other investors or traders? Where are they at? Are they negative? Are they positive? Because that will help you to understand, because a lot of times the anchor VWAPs, They act as support and resistance. They act as boundaries. So that's another one that in my book is important to use. I know this isn't what I plan to talk about today, but your comment off at the top of this live stream got me thinking. Maybe we should. Maybe that's what we should talk about today. Okay, let me clean this chart up here a little bit. I want to make sure I'm getting all your comments on. 5-day EMA helps make better decisions. Yes, it really does, because it takes some of the, when we have big moves, it takes some of that fear away. Because we all get it in the pit of our stomachs when there's a move, a trade that's not going our way, and we just want to take some sort of an action. We want to do something, but we don't need to do something. Sometimes the best thing to do is to sit back, maybe turn the screen off for 5 minutes or so, take a breath, and then get back to it. Absolutely. Let's see here. It was just straight down from the open. It sure was. I mean, that was a dramatic drop. I mean, it literally nearly erased the initial drop, nearly erased all of yesterday's gains. Now, eventually, once we got to the lower end of the weekly expected move where the market bounced today, that did erase yesterday's gains. As a matter of fact, it erased the past gains from the past 2 days. It erased the gains from the past 2 days. That's how ugly this morning was in early afternoon. But that turnaround, when we go back here and we look, for those that are joining right now and may have missed this from the beginning, let me just put this one more comment up while I'm fixing the chart here. Tesla and AMC CEO is making statements to save stock prices. Maybe we see more of this. Yeah, there's always the possibility. I'm going to talk about Tesla some more. We've been talking about it nearly daily here. I do want to talk about Tesla some more today too. For those that are just joining now, that missed my opening statement, today's candle, right, with this body and a long wick underneath of it, it looks like a firework, right? What is it? A bottle launcher? I can't even remember what type of firework that is. Geez, myself from 20 years ago would know exactly what type of firework that is. You know, you would stick it in the old Coke bottle or whatever, light it, and it'd go right up there. I can't remember what that firework was called. If you know, put it in the comments. That'll help me to remember. It's right on the tip of my tongue. But anyways, this type of a candle right here, this is a bullish signal, okay? It's a bullish type of candlestick where you have a body up top, but this much longer wick on the bottom and no wick on the top, okay? And I would call this the silver lining for today. And it is the bullish long wick candlestick. You can look it up. And basically, the long wick that's under or below the candle, the body of the candle, it's telling us that sellers tried to push price down significantly, and they did. But buyers managed to push the price back up. And buyers did so by showing considerable buying strength, which should carry forward and lead to price increase. And when I say lead forward or lead to, that means tomorrow, the next day. It's considered a bullish candle. But You can't just judge things off of a single candle. You need the remainder of the context. So I'm going to go ahead and put the rest of this back on the screen that I took off, like volume. And you can see we had a little extra volume today, but it was still under what our average volume is right now. So we had 2.32 billion trades take place today. The average is 2.37. Okay, so almost at the average for volume today. And that big wick that's underneath, that's where a lot of that volume came from. People hopping on that wagon and riding the momentum of that up. Now, let me add back in the 20, 50, and 200-day moving averages. Now, this is important. For this candle to be considered bullish, what do we need happen? What do we need to happen tomorrow? Well, first off, this black line that is going like so, and this burgundy line that is going like so. The black line is an anchored VWAP that is anchored to the low of 2022, which was October the 13th. The burgundy line is the 50-day moving average. Right now, the 50-day moving average is sitting at 38.82. Write that number down, 38.82. We must break above that number, 38.82, in order for this market to continue to float higher. Like we saw over the past 2 days, the market floating higher. We have got to break 38.82. And then just below 38.82 is where that anchored VWAP is, okay? So that means anybody who bought on October 13th at the bottom is underwater right now. The average buyer over time, it's a big calculation. Now, I know that if you bought exactly then, okay, you are above water. But that's not how the anchored VWAP exactly works. It's not nailed directly to price. It's volume, it's time, it's many things that are included in that. And it's not just buying exactly with the anchor. You have that whole big old candle on the 13th. I can't even go all the way down. There's way more candle. Those are the two main areas. And the top one is 38.82 that we must get back above for us to continue to float up. Don't you remember yesterday's live stream when I showed you the chart? I don't know if I still have the chart or not, but it showed you the probabilities. It showed the probabilities. Oh, I want to pull the chart up. I know I had to download it. Yep, here it is. I had to download it yesterday. Let's get this open. This is showing 1, 2, and 3 days before Christmas and how the market has performed on those days going back to 1988 all the way to 2021. And this is from the Almanac Trader on Twitter. If you don't follow that guy or get his book, I highly recommend it. I'll talk more about it next week. I highly recommend it. Okay, so tomorrow which is Friday. I'll put a F right here. Friday would be one trading day before Christmas. Today was the middle group right here, which was Thursday. And then 3 days would have been on Wednesday, which was yesterday. So down at the bottom, we've got the average move, the median move, and the percent of days that we are up versus down, okay? So looking at today, Thursday, 2 days right here, 2 days before Christmas, the Dow Jones is up 73.5% of the time. The S&P 500 is up 73.5% of the time. The NASDAQ is up 73.5% of the time. And the Russell 2000 is up 76.5% of the time. Boy, oh boy, did we miss that one, right? There's about a 25% chance, this kind of rounding here with a loose number. There's about a 25% chance that today would be red. And what do you know? We fell in that 25% bucket. It's incredible. Now, tomorrow, one day before, the odds aren't in our favor as much as they were for today. The Dow Jones, 61.8% of the time, it's green or up. The S&P 500, 58.8% of the time. NASDAQ, 67.6% of the time. And the Russell 2000, your small caps, 70.6% of the time, the Russell 2000 is green one day before Christmas, or one trading day before Christmas. So that's tomorrow. Tomorrow, we have lesser odds in our favor of it being green, but they are still above 50%, especially for the small caps and I guess NASDAQ. Both of those, or those are the two that have the higher percentages of green days versus the Dow and the S&P. So just sharing this again with you because we talked about it yesterday. It's interesting that this, it didn't work in our favor today. Absolutely interesting that it didn't. Okay, let's keep moving on. Let me get the other indicators up here on the screen. Okay, so what was surface level that was happening in the market today? What was the reason mainstream media was giving for today's price action? Okay. Before I do that, I always want to get your questions worked in here too. Let's jump to Tesla. TSLA. All right. Let's see here. I played Tesla today, jumped in when price broke 130 and bought 20 shares each, buy at 129, 27, 25, 24, 22.5 for a total of 200 shares. Buy orders remain for 120, 113, 110, 100, 97, 80, and 55. That is incredible in my book. Absolutely incredible. I did not foresee Tesla breaking down another nearly 9% today. That is just wow. And why? Why did Tesla fall almost 9% today? Because of an article that talked about Tesla giving a rebate on 2 of their models. And that sent investors just running for the hills in Tesla. And I've said almost every day this week, that if Tesla broke 130, watch out for 100. And Tesla broke that 130 mark today. 125 is where it closed. Its low today was 122.26. I think it will go lower. I do. And I think that until Elon Musk, number one, remember the quote that Elon had, I guess it was in a tweet that he said, that he was actively looking for a someone to take the role of CEO of Twitter, and he was looking for somebody who was foolish enough to take the job as CEO. Well, I think that's one thing. I think if somebody came in as CEO of Tesla, I mean, oh my gosh, of Twitter, I think that would help to provide a little bit of wind to their back, right? Helping the stock to go and break this downward cycle. Another thing is going to be our economy, okay? When we go through a recession, we know we've been through it before. The recession is going to cause hard times. Hard times is going to create a market environment that is really weak. Businesses will be weak because consumers are watching every penny they spend. They're not spending or splurging on much of anything, not really taking vacations. They're kind of hunkering down and waiting for this to pass. And once this slowdown to the economy occurs, and once we start to get on the backside where that is in our rear view mirror, I think that's when Tesla really starts to improve. Because when times are tough, people don't care about what's happening with the climate. And I'm not saying that in a mean way. Sure, they still care, but they have to do what's economically beneficial to them at the time, okay? So most consumers, they're not going to care so much about the climate and what's happening to the climate because they're trying to survive day after day, making sure that they have enough food on the table. You know the list. I don't have to go over it here. But people can't buy electric cars or $60,000 cars at that moment in time. That will hurt Tesla. The automobile industry is going to be hurt over the next several quarters. But once we get past that and things start to improve, and watch the transportation sector as a precursor to better times ahead. Look at Dow theory. With transportation stocks, they tend to lead the way out of the recession. So with that said, yeah, Tesla could very easily now go to 100 or below in my book. That's what I think. Let's see here. Continuing with Tesla here. Your box at 130 to 150 was key. Well, thank you. I appreciate that. It held up there, right there in the middle for a while. Now I'm going back over here to where the last time we were in this situation, and we've got a box here, this blue box, and the bottoms of it. All right, there's two big dips in this chop box, in this blue chop box, okay? There's two big dips, and they come down to about 125, okay? Both of them, right about 125. Those were the two big lows in this chop box. And this was back in September and November of 2020 for this chop box. Now, if Tesla breaks that 125, and I mean, like, seriously, it's going to go under that. It breaks 120, all right? Because if we're looking here, we've got a very weak one little candle here on a resistance and one here as support, and they're both right about 119, 118 a share. I'm not going to call those two support or resistance. I'm going to say Tesla would drop down to this box right here, and this would be the next area for Tesla right here. And this, the top of that is about $100 a share. The bottom of that is about $94, $93 a share. So I'm going to put a line here at 100. We'll leave it blue. And I want to, oops, didn't mean to do that. It's not exactly at 100 even. I want to put it 100 even. So let me open up this line and go 100 even. Okay. And you can see that blue line now, it's right in the middle of the lower chop box to the left of the screen, right above my head. The lower box, that chop box, 100 is like right about in the middle there. And with Tesla getting to 122? Yeah, 122 today. It's not far off. It's not far off. You look at where Tesla has come from, and it is not far off at all. So we'll watch that as a line. I bet there would be a bunch of supply, a bunch of bid offers at $100. It's a psychological number too. That $100 a share, thinking, oh, I can get Tesla for $100 a share. That's incredible. There's probably a bunch of people like that. Okay, so when we look at the falling wedge here, this is typically a bullish structure right here on Tesla. We've been talking about it for a while, but today it completely broke down. So this is no longer a valid pattern unless tomorrow it comes and it shoots right back up to end up being in that box. And now remember what we talked about earlier during the live stream about the 5-day EMA? Well, look at where it's at right now. The 5-day EMA is at 138. Where's the weekly expected move on the lower end for Tesla? 138. So it would not be surprising to see Tesla come back up to 138 tomorrow, to reconnect with that 5-day EMA, number one, and then to reconnect with the weekly expected move. Because what happens when price action moves outside the weekly expected move? 68% of the time, price will move back up to be within it. If price breaks out of the top, 68% of the time, it will come back down and close the week within it. So there's at least a 68% probability that Tesla tomorrow could come back up to $138 a share. How likely do we think that probability is? Well, that would be a big move. And Tesla has Let me just measure. For good measure, let me measure. Going back to December the 1st. So this month, Tesla from top to bottom is down 38.5%. 38.5% in less than a month. In 22 days total, but not 22 trading days. What would that be? Is that about 15 trading days? Is that what I'm seeing there on the chart? To drop 38.5%. That's pretty steep, don't you think? As a matter of fact, I want to put an anchored VWAP on December 1st. Oh my gosh. Look at how far price action is from it. Price action has dropped tremendously on Tesla. And oh man, it just seems like it is one good headline. Didn't you guys in the chat yesterday mention that all it would take is one good headline and Tesla would just squeeze to the moon, right? Yeah, it would. Okay, I don't want to miss your comments here. I know I've been rambling on, and I haven't even really talked about my notes at all today. Let's see. What do you think it is? Do you think retail is capitulating out of Tesla? I think retail is gone. I do. I think retail is gone. Maybe not 100%, but the majority of retail, they're not in the markets right now. They have already left. And I'm not sure when they're going to return. And when they do return, it's not going to be all of them. Because this year burnt so many retail traders that they just said, you know what, this is not a game that I can play. I'm out. And I think that's exactly what happened. So this move right here, I don't know where it's coming from, besides the fact that okay, here's what I think. Elon Musk buying Twitter. Elon talking about free speech. Elon unbanning people on Twitter, allowing them their free speech back. Whether it's right or wrong, doesn't matter. That's not the point. The point is he's allowing it to come back. Elon Musk has released the Twitter files, which it shines a bad light on a group of people and a group of powerful people who will come after Elon Musk. And it just could be that powers with nearly unlimited amounts of money coming together, shorting Tesla, causing price to drop significantly, which would go to your comment from yesterday about one piece of good news and Tesla would have one of the most massive short squeezes in its life. I think that at least should be a consideration, okay? Because if we look, I put the Fibonacci retracement on there yesterday or the day before, and let me do a different one. I'm going to go from the all-time high, 414, and if we drop it down to today's low, All right, now let me zoom back in here just to see what that gives us. Where does that put us? And that's lining up. So, man, the first line, it seems like it's so far away, but it does match up, and it's right here, which is about 190 a share. So if we look at the very beginning of when this falling wedge pattern took place, Tesla was up about $200. So it went from $200 down to $125, just like that. That right there. And that started on December 1st, right? That $200 a share down to $125 a share happened since December the 1st. So that's the first key level to retrace to, and that's the 23.6%. And then the next one, and you can see the candles, they're lining up with it right here, and that's the 38.2, which would be 233. And then to get to the 50% retracement, that is 267. And you can see that, I mean, it's lining up. That would be, you know, the support right here, the support, and then eventual gap down right there, and that chop right there. So things line up. So the first big goal, at least if this was the bottom for Tesla, and I don't think it is now, I do think it will go lower. I don't know if that lowers this year. I don't know if it's going to break that this year, but it's in a pattern right now that it could break this $100 a share when we get into the really deep, dirty, dark recession. I mean, just look at how volume has just been increasing like this since December 1st. It's like, man, from December 1st to now, you know, volume was right there about median, and then it just shot right up. And just going back and looking, the last time we had this much volume on Tesla to even compete with it would be October of 2021, and that was when Tesla was going for its all-time high. Yep, look right there. It went for its all-time high the last time it saw, you know, that much volume. It was on the way up right there. Okay. Let's see here. Dry powder waiting for more, but it double digits if that happens. Yeah. Okay. CRM. Okay. You are very welcome. Very welcome. Yeah, volume is insane. It absolutely is. Okay, let me just clean up some of these marks here, and then we can go look at CRM. I think CRM is going to have a little trouble going forward, because it's really based on companies needing sales, companies needing people to sell their products to, and that's where Salesforce really shines. Okay, so I think over the short term here, I think it's gonna hurt, and it's going lower. Now, we had this chop box. That's what's highlighted in yellow right there. So for basic, we looked at CRM back when they had their earnings report, and we talked about it a little bit. We talked about the earnings report when that occurred. But for the past quarter, it had basically been in a chop box, really going nowhere, right? And then it hits, and here's a example of that falling wedge and it playing out like it should, because a falling wedge is a bullish sign. We had resistance right there. We had our support right there, wedging together. It breaks out and then it runs. That's how it's supposed to work. Since then, though, it's fallen back down. But what I like right here is that even though price is going nowhere, seriously, price is like going nowhere. It's in a little chop box right here. Look at what the market did today. Dropping 1.5%. The Q's dropping 2.5%. CRM was down about 0.9%. But it's holding up, and it seems to be building a base. And you can even look at the volume shelf profile over here, and it comes out just like that. There's a lot of volume and price action right here where price is. So seeing Salesforce move sideways for, I don't know, the next little while, I could see that happen. It's just moving sideways and basically going nowhere. Now, volume here, if I get a trend line, and I'm not going to use the tallest one, but the next one, and go to today, I mean, you can see volume is going down. And that will continue over the next week. See, next week, there is going to be hardly, there's not going to be that much volume in the market, because most people that last week, it's a ghost town, okay? There's no real big economic data drops. I mean, tomorrow is like the last day for big econ drops. And then it's the holiday season. Most people are away during that time. It won't be until we come back and we got the first trading day of 2023 that things start to pick up. And one other thing to point out here is, since their earnings, you see this orange dotted line right here, it's at $120 a share. That's a stock alert that I have set up in TradingView, that if it does get down that low, then I'm going to start personally looking at the stock and seeing, well, what's it doing here? Why did it just cross 120? Is it in a sell-off? Is it moving down slowly? What's the macro look like? And then make a decision on if I want to add some to the portfolio or not. Because I do like the company, and I think that there is growth in the company, but we've got to get past the recession. It's not recession proof. As companies' sales go down, so will Salesforce. Because those funnels, those sales funnels that Salesforce is so good at helping companies maximize, aren't needed as much. There just isn't the sales there to go after. So that's my first thoughts there on Salesforce. I do like it as a long-term play, but short-term, it does have more room to drop and go down. So I'll leave it at that for now with Salesforce. You are very welcome. Absolutely. Volume insane. Yes, it was. Let's see here. I made money today, but I took a big risk by not selling my puts yesterday morning. Oh, that's interesting. It really hurt holding them overnight. I figured the market makers were shaking out the puts yesterday. That's a good call. Absolutely. Good one. Let's see here. And then she continues. That was my only reason for holding. Worked out luckily. Dodged a bullet. Yeah, I would say so. I would say so. But boy, did those puts print today. Do you still have them opened after the turnaround today, or have you closed them out? That would be the question that I would have for you, at least at this point. Okay, let me talk about just real quickly what were some of the surface level problems that caused today's market. Close them. Good. That worked out real well for you. I'm very proud of you. Good job doing that. Really good job doing that. And I'm glad luck was on your side, because it wasn't on my side with today's move. So I'm very glad that it was you that worked out for. Absolutely. Okay, so surface level stuff. What happened in the market this morning? Well, market participants were reacting to disappointing earnings results from Micron, ticker symbol MU, and CarMax, ticker symbol KMX. Both of them were down like 3.5% today. Plus, there was a leading economic indicator report and some cautious sounding remarks from an influential hedge fund manager, David Tepper, on the market's future. Now, the market's concerns about the Fed potentially over-tightening and causing, well, a deeper economic setback or deeper recession, which has plagued investors for most of December, were stoked by a few factors today. One, Micron noted that it was going to cut about 10% of its staff in its response to, quote, challenging industry conditions. That's not good for other semiconductor players, and that's why, like, NVIDIA was down today, and other players in the semiconductor space. Then we've got CarMax that said it expects widespread inflationary pressures, climbing interest rates, and low consumer confidence to remain headwinds for car or used car sales. We also had the November leading economic index. It was down 1%. The expectation was it being down 0.4%. So down 0.6% more than expected. That was real negative news. And this was the 9th straight monthly decline. Then David Tepper, he said he's short equities. He is short the equity market, and he expects the Fed and other central banks to keep tightening for far too long and hold its rates far too long as well, making it difficult for things to go up. Now, his comments resonated with market participants who recalled the hugely successful, quote, Tepper bottom. That it was a call that he made back in March of 2009, and it was spot on. There was a good bit of good news in the market today, which may have helped turn things around. But the third quarter or the third quarter or Q3 GDP estimate, it was actually revised up higher. 2.9 is what the second estimate gave us. But the third estimate today was 3.2% growth in the economy. That was actually pretty good news, even though it's a lagging number, right? It's not something in front of us, it's what's already happened behind us for last quarter. And then the weekly initial claims, they held at a remarkably low level at 216,000. The expectation, 225,000. Now, for the week ending December 17th, that is consistent with a tight labor market. That good news, it didn't offer support to the broader market, presumably due to the understanding that it could persuade the Fed to remain on its tightening path. I mean, which it is still on a tightening path. It hasn't stopped yet, nor has it said it's going to. So I don't know why this keeps coming up in people's minds, but it does. There was a bit of a compounding effect too. And the understanding since the data followed shortly after David Tepper told CNBC that he thinks the Fed and other central banks, like I just said, will keep tightening beyond what the market currently believes. The resulting retreat was broad-based in nature today, with major indices moving noticeably lower right out the gate. The NASDAQ, S&P 500, and Dow, they were all down big at today's lows, like we looked at already with this fireworks of a candle. Now, it also, and I should have mentioned this before when we were looking at the 5-minute chart, it is below that 50-day moving average. We mentioned that. But it's also below Tuesday's low, or undercut Tuesday's low of 37.95. And for most of the session, before the main indices managed to pair some of the losses from this morning in the afternoon trade. But since it did undercut that low, if it stayed there, that would be significant. But it didn't. Buyers did step in, and they moved price up, leaving this long wick behind it. I'm just going to call it the firecracker candle, or firecracker candlestick. That's what I'm going to call it, because that's exactly what it looks like to me. Now, there was no specific news catalyst to account for the bounce, which appeared to be driven by some speculative bargain hunting, or maybe just people who knew that it tagged the weekly expected move a little too perfectly. And that helped to offset the earlier washout. But the S&P 500, it did balance. It just bounced too quick. I can't get this out of my head. That it just was right on that weekly expected move. Okay, moving on from that. One more thing. When we were talking about Tesla, one of the things for Tesla is it keeps pulling down consumer discretionary. All right. Consumer discretionary sector, XLY. It keeps being brought down because of Tesla. The ongoing selling pressure in Tesla keeps bringing that XLY, consumer discretionary, way down with it. And I just see your comment here. Sorry I didn't catch it earlier. Tesla due for a $10 to $15 bounce, whether it's here or at 120 to be determined. DE a solid short extending into mid 23. You think Deere is a good short? Let me pull up Deere here. I know Deere has been talked about frequently in the mainstream media. I personally like Deere for its long term. I hate to see farmers leave the field, but that's where John Deere is going. It's going to become so automated. All of farming is. I don't like that. But Deere is up against the top here. I mean, I can clearly see that. I know deers have this nice strong run. And if we just, I'm going back into 2021 here, because I mean, for 2021, deer moved sideways. Yeah, all of 2021, deer moved sideways. And if we look at where deer is right now, okay, I'll take that back. My apologies. I hadn't looked at deer's chart in a few days here, or actually, it's been over. Maybe I haven't looked at it in a couple weeks. Okay, so if we look here, deer's peak right here in April 2022. That's lining up where deer is currently at. That is going to be a tough spot to break through, especially with economic conditions getting worse. See, deer had this big move July all the way up through November when it topped here, a real strong move. And it hasn't been typical for deer to do that. Now, of course, we've got the 2020 move right there, but once you got into 2021, then deer was in a chop box, going absolutely nowhere for the entire year. All right. Shorting deer at this moment, I see your point, and I do think that's a good call. I do, because farmers right now, as commodity prices come down, and I've showed this many times. Let's see here. Where's my chart? Here it is. We are exiting the stage 6 of economic cycle. All right, right here. We're leaving stage 6. And as we begin 2021, we're going to be entering stage 1. Okay. And in stage 1, you've heard me go through this before. Bonds do good, stocks and commodities go down. If commodities are going down, do farmers have the money to buy new equipment? No, they don't. Stage 2, commodities still go down. Farmers don't have the money to buy equipment. What does John Deere do? They sell farming equipment and lumber equipment, okay? If we go back and look, when do commodities go up? Well, stage 3, stage 4, and then they're the lonely asset going up in stage 5, commodities. So commodities have had their run. I give you that. We're out of that cycle, and I can see now shorting deer would be a good idea. Ticker symbol is DE. Thank you for pointing that out, Junk Master. You are right, and I do agree with that totally. And for as far as it goes for Tesla, yeah, Tesla is oversold, big time oversold. TS LA. Let me go back there real quick. Maybe I should have just started there since we were there. But I was curious about deer, because I like deer for the long term. But you are right; it is going to go down from here. Tesla is way oversold, right? Let me get our other indicators up here and open. RSI is at a 17, folks. That is absolutely ridiculous. 17.59 to be precise. That is absolutely ridiculous. My goodness, 17 for the RSI. And then we go down here and we look at the PMO, which is the price momentum oscillator. 9.28. Are you kidding me? Oh, 9.78. Still, that's ridiculous. Absolutely ridiculous. Tesla's got to bounce. Otherwise, I'm going to call it. This is some artificial BS playing out for Tesla right here. It is definitely due for a bounce. And didn't I say yesterday that about the same thing, that I thought that it was ready for a bounce? And down nearly 9% today. This is getting carried away. It's not logical anymore. This doesn't make sense. Okay. So that's that. Stocks don't go straight down, and this is almost going straight down, just like stocks don't go straight up. Solid read, brother. We shall see. Absolutely. But I do agree with you. I do. Just make sure that you understand. I do agree with you. The weekly expected move taught me. I think, did I start that wrong? The weekly expected move you taught me about helped me with my decision too. Thanks, but you are absolutely welcome. I'm glad that weekly expected move helped. And just so everyone knows, our private investor community, I do the weekly expected moves on about 40 products or so. That goes out every Sunday evening. And then you've got it. You can use it. It's not a support resistance setup for these products. Like Tesla here, you can see it was not support, even though it held for 2 days right at it before breaking down today. I only do the main indices on the live stream Monday through Wednesday. And then if we talk about the other products that I do the weekly expected moves for, that's when I'll make them, I'll bring them out on the public channel, but not until Wednesday. So that way our private investor community gets them Sunday evening, and they can run with them on Monday, Tuesday, and Wednesdays trading. And then we can talk publicly about them on Thursday and Friday, just to see how they did by the end of the week. But just to point out that weekly expected move, I'm going back to the SPX, which is the ticker for the S&P 500. I'm going to that 5-minute chart for today, and that weekly expected move, it's still right here. It's the purple lines on the screen, and that bounced today perfectly. I mean, I couldn't have staged that any better myself. They bounced perfectly on the weekly expected move today, which is what I find odd, because the weekly expected move is not supposed to be a support or resistance line, even though they can act that way sometimes. But it acted that way a little too perfectly today, just a little too perfectly. All right, so that's that. Let's see here. Absolutely glad they helped. Okay. All right, caught up on everyone. That's wonderful. If you have a question, comment, plug it in. We can talk about it. I've got one more thing left that on my notes, and then we can wrap this live stream up if you guys are ready. And that is what to look out for tomorrow, because we do actually have our one last piece of economic data that's significant dropping tomorrow morning. So market participants, be on the lookout tomorrow at 8:30 a.m. Eastern for the PCE price index. This is the Fed's staple tool for reading inflation. The expectation is a 0.2% month over month, 0.2%. The prior reading was 0.3%. And then core PCE price index. The expectation, the numbers are reversed here. The expectation is 0.3%, while the prior reading was 0.2%. That's at 8:30 before the market opens. The market will have time to either gap up or gap down on this information. We shall see. Now, with inflation dropping with the CPI report, but not so much with the core producer price index, it leaves me wondering, where's the PCE price index going to come in at? Is it going to move down with the CPI, or is it going to be kind of stuck like core PPI? It's a good question. And it'll be answered at 8:30 a.m. Eastern time. So you got the expectations, you got the prior read, you know what to look for when that comes out tomorrow, and you've got an hour before the market opens to go through it. I'll send a note out tomorrow morning to our private investor community on Patreon and Discord, so you guys know what happened, give you a few thoughts on it to help you plan your day. Also, at 10 a.m. Eastern, this is for the housing market tomorrow, but we get the November new home sales. The expectation is 600,000. The prior reading was 632,000 units. Okay. So down just a little bit from its prior reading. The expectation, that is. Also, at 10 a.m. Eastern, we get the final December University of Michigan Consumer Sentiment Survey. The expectation is the same as it was the last time, 59.1. Okay, this is the final reading. Consumer consumer sentiment, 59.1. How are consumers feeling? This one will have some sway in the market. The new home sales report, that'll be for like XHB for the home builders. And it'll move that index, not really have a huge effect on the broader markets. That's more localized or sectorized. But the PCE price index and consumer sentiment, those two will have a driving effect on the markets tomorrow. So watch for those. 8:30 a.m. PCE price index and 10 a.m. Eastern, we get the consumer sentiment from the University of Michigan. So let's go with those. All right. Any other questions? I'd be happy to dive into them, or we can wrap this up. And I think we got some. Let's see here. Also, what do you make of SBF using user funds to pay bond? I think that's wrong. If that's true, wrong. SBF, just like any other suspected, he's not proven guilty. He is innocent right now until he is proven guilty. Although public opinion can have a big sway, I don't think he should be allowed to use any funds that are associated with FTX. I think if he can't afford it with his own money, which, you know, how entangled is his own personal money to the money from FTX. Because if you're not running your business smartly, that stuff can become intertwined, and then you're in even a bigger mess. So, man, gives me a headache thinking about how screwed up things were over there. But anyways, he should be using his own money. And if he can't get, I don't know. I don't think he should be using anything FTX related to help himself more. All right, just a quick take there. Let's see here. Exactly 100%. Awesome. Let's see here. Comparing SP 500 and NASDAQ tech DIA for the Dow was recovered almost at the end of November. Was that selling point? Why don't you see DIA more broad trend and aspect? Okay. The Dow Jones, it is absolutely, yeah, I got you comparing. Bullish retrace happened, then dumpage. Hold my mule while I lose all my money. Those are good ones. Those are good ones. Yeah, okay. The Dow Jones, it has been one of those indices out of the main indices that's been on fire, quite frankly. It was outperforming in November and the fall rally. The fall rally is where it really shined. Let me pull it up here and get it out of the weeds. This is ticker DIA. It's what I use to trade the Dow Jones. And you can see here, it had this double bottom right here, which was slightly different from the SPY or the Qs or the IWM, where it first hit in September 30th, and then October 13th, like the S&P 500. It undercut it just slightly. But from there, it went on a sustained rally where now we've got a double top right there. And yeah, you could call that part of it, right? We go like this, down, back up, and then down. That's the double top and the double bottom that we've already talked about there. So now we're in a sell-off position for the Dow Jones. Big gap down last Friday. And then it had a huge gap up yesterday. It's got that big, juicy, bullish firework candle. And I'm going to stick with that name. But that firework candle, it came right back up to its 5-day moving average, 5-day EMA, like we've talked significantly about at the beginning of the live stream, and why the 5-day EMA is one of the most important moving averages to have. Look at how Friday's gap down. It was unconnected from its 5-day EMA. Wednesday's gap up is what really got it connected to that 5-day EMA. And today, if we would have closed at this morning's lows, that would have been disconnected from the 5-day EMA. But no, price rose back up to reconnect. Now what do we see? Well, we've got the 50-day moving average at 329. Price action closed at 330. Okay, down 1% today. So it closed back above its 50-day moving average. It stayed connected with its 5-day EMA, and its 20-day moving average is now above it at 337. The 200-day moving average is above it at 324. I'm sorry, my apologies. Below it at 324, which almost acted as its support line today. And it is almost right back to where we started last Thursday. Almost. The wick of last Thursday is nearly where we ended the day here. I mean, this stuff is just like crazy. I think we could be starting another chop box, just like the chop box that we were running when we made the double top up here, where there was a lot of sideways moving action here with the Dow. So that could be the setup there for the Dow, that it's just going to move sideways. maybe float its way up a little higher for us to end the year. But it's still down for the year, even though it did break. And I should have updated this already. I hadn't, so let me do it real quick right now. All right. I want to the red trend line, that is the trend line that stopped the summer rally. If we zoom in here, this is actually kind of fascinating, and look at current price action around that line. Look at that. It was support. Wicks did break through, but it seems to be acting as a support line now. That's kind of positive for the Dow in the short term, if it can hold above it. That's interesting. Okay, let me do the Qs. I haven't done the Qs yet either, and they were down the most today. So we got to talk about them. Okay, so the Qs were in a pretty wide ascending trading channel, moving up, that they broke out of. Let me bring this up a little higher and open it up some so we can all see it a little clearer. Now, the Qs, they've been underperforming, especially compared to the Dow, but even to the SPY, underperforming. But the Qs were in a falling wedge pattern, okay? Just like the SPY was, just like the IWM was, and it broke out, okay? The breakout was yesterday. And then all of those juicy gains were given back. But if we run that trend line out now, okay, and then we adjust the top trend line, it's not valid until we get 3 or more points, but I can still put it there. And if that resistance line for the Qs, if it holds, and tomorrow we just basically move sideways or start moving down a little bit, I don't think we will move down, but move sideways. And if that holds, then we've got another falling wedge pattern. Okay? We've got another falling wedge. All right, let me get an anchored VWAP on December the 1st. And look at that. I mean, wow, price is way down underneath that. Way down from the 1st. All right, let me go to the 15-minute here. A great question. Does TradingView have a trailing stop loss? If you are trading in TradingView, I believe it does. I am not 100% sure. When I'm setting up my stop losses and playing that way, I'm typically going from the brokerage account and not doing it through TradingView. Let me see here. Okay. Well, let me see. I might be able to answer that question by doing this and by doing a paper trade. Okay. You can do, well, it looks as though it looks as though you can do a trailing stop loss just by looking at this, because, and the reason I say that is because when checking on stop loss here, you have a dollar amount that you can enter in. So if we had a target, we're buying this at what is it right now? 266. Say we buy it at 266, right? It goes to 270 and we can get stopped out or take profit, I guess I should say, at that point. Or if we buy it at 266, our stop loss, we're going to put it at 265, we would get stopped out. But there's also a percentage here, and it's not telling me if it's a trailing percentage or not. It's just telling me percentage. So I don't know for sure if this will work as a trailing stop loss. But I can find out and then just put it in the description of this video, the answer, or put it in the comment of this video, the answer to that. So we know for certain whether it does or not. Okay. So I'll look into that. I'll see if it does. Then you say, so the short, the moving average, the less lacking indicator. I'm not sure I understand that question. The short, or does it stop? Does TradingView have a trailing stop loss? So the short, the moving average, the less lacking indicator. My apologies. I don't quite get that one. The 50-day moving average is a very important moving average. Bullish above, bearish below when it comes to that. The 5-day moving average, think of it like a circuit board, okay? As long as the candles or candle wick is touching the 5-day EMA, then that circuit is complete and electricity can flow through it. If the candle or candle wick is disconnected from the candle or candle wick, then the circuit is not complete, okay? And the electricity can't flow all the way through. And an example of that is over here on the left, where this big candle moves down, okay? This right here is the 5-day EMA, right? So it's now disconnected right here. It's also disconnected right here, and it doesn't reconnect until right here. Price always gets back in touch with that 5-day EMA, okay? And that can help you when you're trading. Absolutely, because you know that at some point price is going to get there. And it does it one of two ways. If price moves down, then price is either going to move sideways as the moving average comes down to reconnect, or price will start moving up to then reconnect with that 5-day moving average. So there's a couple different ways that it can happen. You're very, very welcome. Absolutely. Okay, so the cues here today, this is the 15-minute chart. I mean, you can see the gap down this morning. Big old gap down. But it bounced also, just like the other indices, the early afternoon, and it just rallied. And something that I always do on big gap days like this, okay? That is to put an anchored VWAP on the opening candle. And that lets me know, okay, because that's going to act like either resistance if it was gap down day, or it's going to act as support if it was a gap up day. So once we got, in this black line here, is the anchored VWAP I just attached to today's opening candle. And you can see by the time we get over here, we run into resistance, we break through, okay? Then we back test, and then we take off. Buying on the back test of that is your trading strategy, okay? And you should end up winning the majority of those trades. So again, when price breaks above that anchored VWAP right here, it'll pull back and test it, find support now, and then from that moment, it will take off from there. And once it starts to take off, that's your sign, that's your cue to go ahead, put a bid in, and ride that up. That's how I use the anchored VWAPs. And then it would work in the opposite direction if we gapped up and then we started to come down. Then the anchored VWAP would act as support, keeping price above it. And then once it broke below it, then I would take a short position. So it can work in both ways, on a gap up day, gap down day. You are absolutely welcome. Absolutely. Okay, any other questions, or I can go ahead and wrap this live stream up. We've been going for a while. I greatly appreciate all your questions. This is incredible. I must say, absolutely incredible. But that's what this live stream is here for. Every day, the market is open. In the evening, we go live to answer your questions. Sure, I've got some notes to go over to talk about what happened, why it happened, and what to expect going forward. But your questions are the most important thing to talk about. And I want to answer as many as possible. And if I don't have the answer, that's fine, because I don't know everything, and I definitely do not profess to know everything. Gold. Did I see something there about gold? I think I did. How about gold? Okay. Let's talk about gold real quick. GOLD is a real easy ticker to remember for gold. Gold had a burst of energy this fall. Let me get this chart set up right quick. Another amazing show. Thank you for that. I greatly appreciate that. I really, really do. All right, let me get to the daily view here for gold and get the chart set. Okay. Let's get 2022 in here. All right, so the beginning of 2022, what helps gold? What helps gold? Economic problems help gold. Geopolitical problems help gold. Those are two big things to help gold. So talks of recession, talks of war, always help gold. That's why there's two very distinctive rallies in gold this year. First, beginning of the year, Russia invades Ukraine, gold shoots up. Then for the rest of the year, gold went down. Gold shot down. Then we get to November. And in November, the economic concerns are underway. But what's the big other asset that's in trouble in November? What is it? What's the one asset that since November has been in trouble? The dollar. When the dollar goes down, this is really simple to remember, and this is how you can trade gold and be successful at trading gold. When the dollar goes down, when the dollar is weak, gold goes up. And look at the dollar since November, okay? The dollar right here peaked at the end of September. October made lower highs. And then finally, the last big high was at the beginning of November. And at the beginning of November, the dollar shot straight down. And now it's in this trading channel, a descending trading channel. It has pulled underneath its 200-day moving average. It is underneath a declining 50-day moving average, and it's also underneath its 20-day moving average. So it's not in good shape. But my line in the sand for the dollar is 102.5. It's trading at 104.3 right now. And if I go back to gold, GOLD, and look at November to now, what has gold done? Well, look right here. September, gold hit a bottom. October, it did the same bottom. November, the beginning of November, the third bottom. And then what happened from the beginning of November? Boom. Gold went straight up, and now gold is in an ascending trading channel. The complete and opposite of the dollar. So the dollar and gold have an inverse correlation. Watching how the dollar performs can help you trade gold. Another correlation, or an inverse correlation, is the dollar and the SPY. The dollar and SPX. So the S&P 500. They also have an inverse correlation. Now, one more thing to point out is when gold was trading down for the majority of the year, what was the dollar doing the majority of the year? The dollar was trading up the majority of the year. So this is one real simple way to maximize trading gold by comparing the two and how they both move, okay? Now, on TradingView here, you can pull one up, or you can do a couple things. You can divide one into another, so you can always see which direction one is going over the other. You can also just add the other one right to your screen. So if I do DXY, which is the ticker for the dollar, put it on the screen, and you can see the complete and opposite correlation here. Dollar goes up, gold goes down. The dollar goes down, gold goes up. Real simple to understand. And as for your other question, Richard, don't you think gold is safer than others? Gold is a pretty safe asset when we're going through uncertain times. recessions and wars present uncertain times. So, yes, I think gold right now is a safe bet because we are getting deeper into the weeds of uncertainty surrounding the economy. That will help the price of gold to accelerate, to appreciate as an asset. On top of that, we've got Russia and Ukraine, and Zelensky was just here in America talking to the president, talking to Congress. Now, gold here, let me do this trend line here, and then we'll wrap this up for tonight. This trend line right here is important for gold to maintain, okay? I just need to change the color because that is support, so I'll make it blue. This support line needs to be held for gold. It's also right at its 200-day moving average, okay? Or just above it. It's important that gold maintains itself above that 200-day moving average, okay? Actually, those two, there we go. This matches perfectly. Here's that trading channel that gold is in. An ascending trading channel, meaning it's moving higher. It's above its 50-day moving average, which is right here. So when it comes to the 50-day moving average in a normal market, it's bullish above, bearish below when talking about the 50-day moving average. It is connected, or it looks like it to be very closely. No, it is slightly under its 5-day EMA. Its 5-day EMA is at 1797, and it's at 1792. So about $5 below that 5-day EMA. Be nice to see it catch up and reconnect with it. The high today, or I should say tomorrow. I should say tomorrow. The high is 1795. So that's $2 below its 5-day EMA. So it'd be great to see it come up and connect with that, because it did come back down today and connect with it, where yesterday it was not. Or I mean the day before, my apologies. The day before it was not. That 200-day moving average is running through these candles just like this. Holding above that will be very important. And its 20-day moving average right now is basically running along where the lower side of the trading channel is. So holding above those will be important for gold to continue to move up. Plus the dollar, well, the dollar's got to continue to be weak for gold to continue to move up. And if the dollar breaks below 102.5, then I think things are pretty sad for the dollar at this point in time. And that could be a turning point where the dollar, instead of being strong for the majority of the year, now turns to being weak as we enter into 2023, getting ready to go through a recession. So that would be my thoughts there on gold. Okay, well, I'll wrap the live stream up here. Thank you guys so very much for being here with me. I absolutely appreciate each and every one of you. I do this show live every day the market is open. So I will be back here tomorrow after the market has closed to talk about what happened, why it happened, and what to expect going forward. Also, do me a favor, click that like button, share this video with a friend. Those two things greatly help out the channel, and I greatly appreciate them. And I appreciate you for spending your time here, asking all these wonderful questions. I love the questions. It is the best part, and it is the reason that this live show is here for you. So join me back here tomorrow. Bring your questions, and we can talk about whatever it is in the markets that you would like to talk about. So we'll leave it here. Again, have a wonderful evening, and I will see you in the next video. Take care.